There's one stock that is about to skyrocket. It is a uranium stock. Uranium is very important for nuclear reactors, and nuclear reactors are coming online in the next 3 to 5 years and beyond to power data centers at the blessing of the government and big tech. So there are small nuclear reactor stocks that are also pumping in the last few weeks. Uranium going with those makes sense. This stock, CCJ, is at an important price level where you can buy it with low risk and get a big reward if it goes up. So this is my idea, and let's jump into the chart. Hit that like button if you like these ideas.
This is Sam Putnam.
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 So here's the idea. It's just an idea. But if you look back to late July, there is a peak there. And after earnings, the stock sold off, came back. And now we're at a level where it appears to be hitting that level and holding. So if it can hold over the next few days, these days are very compressed, and there could be some moves to the upside in uranium stocks. I don't know that the other ones are as safe to buy. LEU is super extended. UUUU is okay. It's also pretty crazy extended, 170% up from that green line. That green line is called the 200-day moving average. So it's on Robinhood, for example. If you go to Robinhood Legend and take a look at the charting software, it whatever it's called, I don't know what, if it's Robinhood Legend or what their charting software is called. I guess it's Robinhood Legend. But this is what it looks like. It has that green line. And that's by default. I didn't put that line on there. So I just did the 2-factor on my phone. It's got that cool noise. And if we look at CCJ on here, CCJ, this is, all right, well, it doesn't have the 200-day. It doesn't have the green line, but it's got all the other lines I got on my chart. It's got the 20, the 50, and the 10. This is the 50, this is the 20, and this is the 10, that blue line. So whatever software you use, I'm just showing you this to show you how important these lines are. So if it's by default on the most popular retail investing platform in the world, then a lot of people are using it. And when a lot of people use a line, that means the price starts to act somewhat predictably around that line. That's all I'm saying. So if we look down here, I'm just going to switch over here because I'm so used to this. I'm sorry. But if we look down here, we're talking May, right? I can't even tell on this because I'm so not used to this. Yeah, this is May. Okay. You know what? I'll challenge myself. I'll do it over here for everybody because we can all agree on what Robinhood is, even if I think that it's not as user-friendly as this other one I've got going on here. This is Schwab Thinkorswim software. It was owned by TD Ameritrade, and Schwab bought TD Ameritrade, so Schwab owns this software. But this is Robinhood. When these lines come together and they cross, they all get super close, the stock starts to move up. That's sort of what's indicating that the stock is changing direction. Or if not changing direction, well, it is changing direction, but it might not keep going, okay? But the whole point is that you don't have to just look at the lines. We can get rid of these, actually. If you're just looking at this chart, it starts to look a little bit like a kaleidoscope. At least I see a kaleidoscope a little bit. Whereas if you put some lines in here, and you don't even necessarily need that one. Let's just say you put this one in here. You start to get a better idea of what's going on here. It's slowly turning up, and you can see how it acts around this line. So you could say it sort of almost touched it here, sort of almost touched it here. Sort of like went above it and then touched it and then went up more, used it as a level of support here. And if that sounds like I'm being super fugazi with it, let's add this one that follows it even more closely. It's an average of the last 20 days. So with this one, you can see how it sort of almost touched it here, sort of almost touched it here, sort of did touch it here. And as soon as it crosses it, this line is great for deciding when to sell, because let's say you have this line on your chart, which, like I was saying, everyone who opens up Robinhood has it on their chart by default. So you have to literally turn it off, like I did with this one that says 50. You have to literally make it invisible to get it off your chart. So this one's great for deciding when to sell, because if you buy it, let's say you don't buy it here, you're not perfect, okay? Let's say you buy it maybe here after this little compress flag situation here. Went sideways for a bit, you bought it, and you bought it in such a way where, you know, maybe you bought it here, maybe you bought it here, maybe you bought it here, maybe you bought it here. Whenever you bought it, even if you bought it here and your risk happened to be below the next day where it went down, you were risking a few dollars. Or, you know, you saw on your phone that you bought it around a 51 average, and you saw on your phone, let's say you took a 1,000 share position, okay? So you have $50,000 in this stock, okay? You have $1 million portfolio, make it super easy numbers. You put 5% in this stock, okay? And that's 1,000 shares. If you're down a couple grand and you're like, okay, that's pretty much my limit, 4% would be down $2 a share on a $50 stock, right? And you're like, okay, fine, I'm going to definitely stop out if I'm down 5% on this position. If I lose $2,500, will be 5% of a $50,000 position, which is 5% of a $1 million portfolio. So down 5%. Stick with me here. I think I'm going to land this plane. You're down 5% of a $50,000 position, and that position is 5% of your portfolio. That's 5% of 5%. That's 0.25% that you're down on your account, which is $2,500. Okay? We can all agree on that. So if you're okay with being down that, and you hold because you decided when you get in, you're just going to sell 5% down. Then you get a little push because you held through all the sideways. This is why we don't day trade every day. We're not in the stocks community talking about Hey, this stock is up 0.5%. This stock is down 0.5% on the day. Because you can't, I can't, almost everyone, I don't know anyone who can predict it a lot. I know people who day trade. I know very few of them who do it profitably. Most people who trade profitably do it over longer periods of time, 3 to 5 days at the minimum. So if you're in this stock and it's gone sideways for a couple of days, maybe you're up a few percent, down a few percent, like the example I just talked about, you were down 4% if you bought on this day here, and you came back up, you're fine, you're break even, and then suddenly you're in the money a little bit. If this little green day, at the end of this green day, it closed green. In the money means you're making money. You're in the money, your position's green, and then the next day it gaps up, okay? And it's a green day, so it closes green as well. So now you're up about 13%, something like that, right? 10% of a $50 stock would be $5, so you're up more than $55, price. So now that you're up more than 10%, you sell half your position. So it's a $50,000 position. You sell half, and the second half you hold, and you decide, hey, this line is on everyone's charts. I'm just going to sell when it hits this line or goes below this line. Goes below is usually what most people would say it means when you say you're going to risk this line for your second half of your position. Well, guess what? If you do that, look at this move on CCJ. Yeah, you locked in half your gains, and so you feel good and you can hold this position, and you're not worried when it dips down a little bit. When it goes down a few percent, when it goes down a few dollars a share, you're not worried because you already locked in some money. So you can just hold through this whole line all the way until up here when it touches this line. This is a full month. So this is why this is not a day trading strategy we're talking about. This is a full month of this stock being on your phone, in your broker, on your computer. You don't have to look at it every single day. You just take a look and you say, oh, it's up a little today, it's down. And then you look a week later, it's up more. And then a month later, you're up more. And then it starts to pull back a little bit. And you notice after like a week of, maybe you check your phone once a day, right? Or I check it more than that, but I'm just saying you could check it once a day. After a week of checking it once a day, you notice it kind of went sideways for about a week. And then you check in on your Robinhood or whatever software you use, whatever app you use, whatever charting software is on your computer, and you see it hit this line. And then you sell out half your position. And you know what? That would have been a pretty smart time to sell because you free up that money. The stock just went sideways for 2 months, basically. And yeah, it went up a little bit more. So maybe you could have made some more, but you could have bought a better opportunity. So that's a little moving average lesson. And this is a great stock to talk about for that lesson because it just trended for so long here. But right now, again, the idea is there's some compressed days. You can risk a few dollars and then you make 10, maybe sell half your position, and then you hold it and use one of those lines to hold the rest. So we looked at some other uranium stocks. We looked at some price levels. And if you like these stock ideas, head over to stockscommunity.com. You can try it out for $25 for 7 days. You can ask questions in there. And if you haven't subscribed yet, hit that subscribe button. And if you like these videos, hit that like button, and I will see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.